with a total value of almost $3.5 trillion. It's the first time at the top since January 24th. But what do you do with the shares here? Buy or sell? Guy.
Well, you're familiar with that meatloaf, the singer?
No. Mr. Loaf?
Yeah.
Mr. Loaf?
To you.
2 out of 3 ain't bad.
Exactly.
Do you have a real name? Do you have a real name on meatloaf?
Not Jim Steinman. It was like McEnany or something. Sorry,
I don't know.
I'm sorry. I apologize.
Mr. Loaf, to you.
Nvidia is the out of the two, that's the third one that I've obviously not gotten right. And here we are at 141, which is where we were trading after they reported earnings. An earnings report that we collectively said was very good. The margins were great. Everything was alike. The stock actually sold off in a few days after, got down to 134, and it felt like a sort of a replay of what we saw in January, but it's not. Now you have analysts sort of piling in. You still have to take at that 153 level, and given today's price action, it feels like it might happen.
And there's also a report, I think in the information yesterday, that they're going to develop a new China chip, basically that goes right up until the limits in terms of exporting AI chips, the H30, I think, P30, excuse me.
Yeah, and this happens. Obviously, there's been a lot of back and forth, and, we throw Nvidia in that sort of final battle fought with U.S. tech brands, and Tesla, Apple are right in there. They thought they got some sort of exclusions, and then it's gone back and forth, and I think it's about as clear as mud what's going to be going on there. And, listen, I have no idea. I'm with Guy. Last week, it felt like a lot of folks were really excited about the guidance that they gave, the trip that Jensen Huang had gone on with Trump to the Middle East. And
you know what we call that?
What do we call it?
We call that Gensanity.
Oh, my gosh.
Oh, nice job.
I
forgot all about that. So catchy.
Yeah.
Anyway.
So we're not just about acronyms here. We're about nicknames,
we're coining
too.
terms.
Okay,
we're doing a lot.
No, that is something that I think a lot of people look by some of the issues as it relates to China. I'm still in the camp. You can kind of look at a CoreWeave and you say, look what's going on here. You can kind of look at Microsoft back towards those all-time highs, despite that we don't see any meaningful pickup in Copilot and that sort of thing. We saw Azure kind of do better than expected. So I'm just in the camp that sooner or later, I've been saying this for a year, you're going to get a bit of a digestion. But the one thing I just want to say here is that, we talked about this, whether it was going to be from $153 or $200. These stocks can get cut in half. And it happened in a very short period of time. So there are risks when you're buying into this where sentiment feels absolutely great. And that's one of the reasons why I think it's really important to keep touch or close to these data points in Taiwan Semi, which makes up almost 90% of NVIDIA's high-end GPUs. If you're hearing it from there, you're hearing the guidance, you're hearing a new channel, then I guess that's fine. I'm just not a buyer here. I wasn't a buyer. I should have been a buyer at 95. Everyone should have been a buyer at 95, but who knew?
Well, that was the digestion, right? And so, you said there will be a digestion again, I'm sure, but it's $1 trillion since that low point. And what we got the other day from NVIDIA was at least a handful of answers that were really important. We had a China answer. I think more broadly, even not just on earnings, we've had some answer in terms of export restrictions and also, where NVIDIA was really on the other side of the U.S. government. NVIDIA right now seems to be, alongside the U.S. government, running around the world cutting sovereign AI deals. We're going to talk a lot more about Meta's deal with Constellation, but that's just another reaffirmation that the demand out there for AI data center is alive and well, and hasn't even altered at all. So I think Blackwell supply, some of the dynamics, I think, around just what's going on with their next wave of chips has now been answered. There's still some uncertainty, but why would we doubt NVIDIA after they've delivered on everything else? But most importantly, it gets back to valuation, because this is a company that's trading 27, 28, 29 times 12-month forward with a NASDAQ that's at 25, 26 times. What would you rather own here? Would you rather own NVIDIA and its growth or the entire index, which people say?
Regaining its position as the most valuable corporation in the world, Nvidia surged 2.8% on Tuesday, closing the day with a $3.45 trillion market capitalization, just ahead of Microsoft's $3.441 trillion. Nvidia has now dethroned a competitor 3 times in the last year. It first overtook Apple in June 2024, then again in November, before retaking the top spot from Microsoft. The spike is a result of the unquenchable demand for AI hardware. Over the previous 2 years, NVIDIA's GPUs have significantly increased revenues due to their continued vital use in data centers and generative AI tasks. In fact, during the past 5 years, NVIDIA's stock has increased by about 1,500%, with a 22% increase in the previous 12 months alone. Despite losing over $8 billion in H20-related revenues in China, NVIDIA reported better-than-expected earnings in the first quarter, beating analyst projections. NVIDIA projects Q2 fiscal 2026 sales of roughly $45 billion, 2%, which is less than the $45.92 billion that was predicted before to the China GPU ban. Nvidia's ability to maintain profitability and grow its advantage in AI accelerators despite export limitations is what keeps driving its extremely high value. Therefore, investors should be concerned. The shares of Nvidia plummeted this year after rising more than 800% between 2023 and 2024. Investors are concerned about both its long-term prospects and the potential short-term harm that tariffs could cause. Their concerns have been allayed thus far by the company's performance. The stock surged when Nvidia exceeded forecasts in the first quarter of fiscal 2026, which concluded on April 27th. Is that possible? Let's examine whether purchasing $10,000 worth of Nvidia stock now could grow to $1 million in 10 years. When it comes to graphics processing units, GPU, which power demanding applications like gaming and generative artificial intelligence, AI, Nvidia is the industry leader. It holds up to 95% of the market, which is growing quickly, particularly for data centers that support generative AI. Although IBM has long been a leader in GPUs, the emergence of generative AI greatly boosted its growth, which is still going strong today. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Jessica, I want to start out with the first stock on your list, Nvidia. Look, it's had quite a run over the past month, gaining more ground today. You had Jefferies adding it to his list of highest conviction picks today. Tell me your view here.
Yeah, Diane, we left off last week. We were looking for a reacceleration of demand, and that's exactly what we got from Jensen Huang, and also broader adoption. I read this really great report where 78% of global companies utilize some shape or form of AI, and that was from McKinsey. So there tells me there's broader adoption. Where is that acceleration? And he gave us about 4 reasons. One, inference and reasoning AI. Obviously, we're way beyond just purely utilizing it for chat. That's ignited exponential demand. Inference costs are coming down. That was a big headwind when we had this integration or DeepSeek came out. However, there's still demand. So that's actually good. That's driving efficiencies. And that's what I think we need to follow. Global AI and infrastructure build out's the second one because of the administration's really fiscal policies. The diffusion rule was lifted, which means there is broader adoption that could happen on American-made AI stacks. I think the headwind for that we really need to watch, though, is with China integration. Jensen Huang said himself, so as those negotiations are happening between the administration and China, I want to see how AI plays into that. According to Jensen, there's 50% of AI developers are there. And as we've seen with the broader large language models, those that are open source tend to really accelerate in their growth. So I want to see that access to China, but we want to see them built on American stack. That's Jensen's words, and that makes sense to me. Third is enterprise AI stack integration. Again, agents are working really, really well. They are great enterprise use cases. And then industrial AI and robotics beyond that. We're seeing that even with Tesla and their self-driving models. All of these 4 things hang on demand from NVIDIA itself, which I think would reaccelerate that AI narrative. Of course, the broader macro theme could be a headwind. Lots I said there, Diane.
Yeah, no, but I understood what you said. Even especially the point about agents taking over, and one day, who knows, maybe our agents or digital twins will be talking to each other. All right, but this is
In the first quarter, sales grew 69% year over year, exceeding analyst forecasts. Additionally, non-GAAP adjusted profits per share, EPS, were $0.81, exceeding analysts' projections of $0.75. Huang did issue a few cautions. Due to legal restrictions on what it may ship to China, Nvidia's top and bottom lines suffered, and the company was charged $4.5 billion for shipments that had to be canceled in the first quarter. EPS would have been $0.96, and the non-GAAP gross margin was 61% rather than 71.3%. In the long run, Huang fears that excluding the United States from China will encourage China to create powerful AI technologies of its own. But he believes that generative AI will eventually become a fundamental aspect of human existence. According to him, the need for AI computing will increase as AI agents gain traction. Nvidia is at the forefront of this significant shift as nations all over the world acknowledge AI as vital infrastructure, much like electricity and the internet. It would take 100-fold growth in Nvidia stock, or 10,000%, to convert $10,000 into $1 million. A $10,000 investment would now be worth almost $2.4 million due to the more than 24,000% gain in Nvidia's stock over the last 10 years. Will Nvidia's stock be able to do it again in the upcoming decade? It would take a 100-fold growth in Nvidia stock, or 10,000%, to convert $10,000 into $1 million. A $10,000 investment would now be worth almost $2.4 million due to the more than 24,000% gain in Nvidia's stock over the last 10 years. Will Nvidia's stock be able to do it again in the upcoming decade? Unfortunately, it's very likely that the answer is no. Nvidia's sales over the last 12 months total $148 billion. Revenue rose 114% last year, but it is already going down. The larger the base, the more difficult it is to report that kind of gain. Because of this, even though they are top firms, companies like Walmart and Amazon, who are the two biggest in the U.S. by sales, record substantially lower sales growth, 5.1% and 11% respectively last year. It appears improbable that sales would reach $1.8 trillion if they were to expand at a 30% compound annual growth rate, CAGR, over the following 10 years. The rate is more likely to slow as the base grows. Its sales would reach $800 billion, which would be more plausible in 10 years if it grows at a 20% CAGR over the following 10 years, which is also unlikely. A market valuation of over $20 trillion would result from maintaining its present price-to-sales ratio of 26, which doesn't appear possible even in 10 years. Even yet, it would only be roughly 7 times the present market capitalization, not 100. It is even less likely that your investment will grow 100-fold if the market capitalization is lower due to a lower price-to-sales ratio. But that doesn't mean you shouldn't buy Nvidia right now. Being the leading brand in its sector, it has enormous development potential. However, be realistic and don't count on Nvidia to replicate its remarkable performance in the upcoming 10 years. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Rick, take us through what you're paying attention to when it comes to the chart for Nvidia.
So the chart for this one, we're at a potential turning point here, a key resistance level. If we were to look at our current price, you can see we topped out recently near 143, 144 or so at this red line here that represented a high point and then a low point and then another high point here after our initial fall that took us to our purple 250 two-day exponential moving average. So this level, 142, 143, that is a key point. That's about where we're sitting right now, just below that point, a hair below 142. So for now, though, we can see that we've had a sharp rally off of these lows, 86.62. We're up about 63, 64% from that point here. So it's been a very swift turnaround after the tariff news-related turmoil that sent stocks so much lower here, but rebounded very quickly. For now, though, we can also see the 130 level sticks out here. This green line, a repeated stopping point for price during the past year. High points here, low point, low point, low point, low point, etc. So now it also lines up with our yellow 21-day exponential moving average, a shorter-term moving average commonly followed by many traders. So that would be in confluence with that key price level. So an important downside area to watch in the shorter term. We can also see RSI, our measure of momentum, has been fluctuating lately. A little bit of bearish divergence here as price made a new closing high, but RSI went downward here. Seems to be on the verge of being invalidated. If RSI were to break above this trend line, it would not only invalidate the downtrend, but it would also push back into the overbought area, typically regarded as a sign of strength in a trending market here. So now, if we were to look at our volume profile study, we can see that the area where we're passing above right now, this is a heavy volume node area between about 132 to 138 or so. So that's more important news for the bulls that price is hanging on above this key consolidation point that also lines up with our +1 standard deviation channel, which many traders use to project support or resistance here. If we do keep moving upward, the +2 channel comes in near 151. That could be an upside area to watch. But this general level, 130, would be the extreme low point, lining up with our moving average, a key downside area for traders to watch for support.
Okay, Jessica, want to send it back to you for final thought on Nvidia before we get to your next stock, especially in the context of what Rick was saying about paying attention to RSI fluctuating there.
Yeah, absolutely. I love the way Rick and I have discussed this as well, that he utilizes RSI because I think so many people use it the wrong way. It can validate that trend if it's in the overbought territory, as long as it's making higher highs with the underlying security that we're analyzing. So I'm certainly looking for that. And I'm also looking at that relative to the overall market as well. NVIDIA is a big piece of the macro narrative at the S&P 500. However, the macro narrative is not just growth, and it feels a little narrow right now. So I want to see validation, but then I also want to see what that looks like more broadly.
Okay, well, as things stand, Nvidia now outperforming.
Although the current socioeconomic climate does not exclude AI pioneer Nvidia, the semiconductor giant is still operating at full capacity. According to its fiscal first quarter results, which ended on April 27th, revenue reached $44.1 billion, a 69% year-over-year increase. Even though Nvidia's sales to China have decreased as a result of the Trump administration's trade policies, the semiconductor giant nevertheless had to pay a hefty $4.5 billion in Q1 for excess inventory that was originally designated for Chinese clients. Growing sales for Nvidia helped the company's profitability to rise. Q1 net income was $18.8 billion, a 26% year-over-year increase. By increasing diluted profits per share, EPS, to $1.76, a 27% year-over-year rise, the bottom-line growth benefited shareholders. The company's well-liked AI solutions have contributed to its revenue growth, and this success is expected to continue. Artificial intelligence systems are now able to simulate human thought processes thanks to the company's new Blackwell platform. This is the moment when AI becomes essential for businesses, and Nvidia will profit from it. In the Q1 earnings release, CEO Jensen Huang stated that Nvidia is at the forefront of the global shift toward acknowledging AI as a necessary component of infrastructure, much like electricity and the internet. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Certainly nice to see the S&P 500 getting closer and closer to 6,000 after we were at around 4,800 in April. Some of your thoughts on the levels today?
Yeah, Nicole, we continue to inch higher here. Even with that ADP report that you kind of mentioned, the market did see a little bit of a pullback to start the day, and then we started seeing some buyers really kind of stepping in here. And hopefully we are able to see some follow through. We are seeing some pretty decent participation with around 56 to 57% of the stocks in the green so far today. And you'd like to see that obviously increase. But the levels that I'm kind of focusing on, one of them we're kind of over right now. 59.70 is going to be a key area for us to be able to try to break through. We saw that as a key area of resistance yesterday. It has been in a resistance area in the past here, but this does kind of confirm this breakout pattern that we had, the consolidation over the last couple of trading sessions, Wednesday, Thursday, and then breaking out on Monday, follow through yesterday, and you'd like to see a continuation of that, hitting that 6,000 level to the upside here today. Now that 6,000 level is going to be very key. There's a lot of options positioning that is sitting there, but we have seen, and if we are able to break through, maybe a catalyst or new buyers really trying to step in, deploying capital, trying to get back to those new all-time highs. On an intraday basis, Nicole, also, if we are able to break through 6,000, which is actually possible here, 60-20 is another area that is getting some positive flows this morning on the call side, so that's something to be mindful of. And if we do see a breakdown below that 59.70 level, I'm looking at 59.40 as your key area of support here today. So overall, we continue to move higher and kind of go back to that ADP report. It was a shocker, but we have to do two things to keep in mind. The calculation's a little bit different from from what the BLS does. And then two, we might also get into this type of environment, Nicole, where the market starts seeing deterioration in the job market, and then we anticipate rate cuts being accelerated. And that actually has been a key catalyst for equity markets in the past. We might be going into that new regime if we do get a confirmation of this type of trend in the BLS report on Friday. I find it very odd that the president did kind of chime in around ADP, knowing that he actually does get an insight, a little bit of an early look to the BLS data on Friday. So he might be projecting maybe some weakness here. And that might be another reason why the equity market is probably buying this up a little bit, as well as yields being bought up on the longer end of the curve.
You are so right. I didn't even think about that this morning when I saw President Trump saying that Powell was late and that he should cut rates. And I was thinking that all this was based on the ADP print. And you're right. He does get a glimpse of that Bureau of Labor Statistics print on Friday. You're looking at some other things. Moving averages. What are you noticing about the moving averages?
Yeah, so obviously we're getting close to potentially all-time highs here, around 200, 250 points or so. The 50 SMA, or the percentage of stocks above the 50 SMA for the S&P 500, sitting at around 70%. So you're at the upper end of that range. But if you kind of compare that to the 200-day moving average and the percentage of stocks that are above that moving average, we're still only sitting at around, let's say, 50% or so. So there's still a little bit of a gap here, and that gap usually does converge. And what you would like to see is obviously a lot more stocks getting above their 200-day, more participation to the upside. Maybe those lagging sectors really starting to ramp up here if we are able to get to new all-time highs. And just kind of going back and just being mindful here, could this be a potential reversal area? This could be. I mean, this is a key area of resistance here for the S&P 500. But if we are able to break out and really test those new all-time highs and break through that, if you go in the past, Nicole, really good returns on that breakout as well. So if a lot of traders are probably looking at this market and saying, hey, man, I wish I would have put more dollars to work, there's still a lot of upside potential here if this has been a confirmed bottom and we are entering into a confirmed and bull market. Another thing to just highlight here today that I wanted to keep on the radar, the Reuters is reporting potentially an executive order being signed for rare earth minerals and trying to expedite mining here in the United States. So keep your eye out on those stocks. We know last week we had the announcement regarding the nuclear stocks. We saw those completely ripped to the upside. This is one stock. There's a couple of them, but this is the largest mining company here in the United States that really focuses on magnetics, which has been an issue. And so this is MP Materials. And this could be one of those stocks that actually catches a little bit of a bid if that executive order does get actually signed here. And that EO is supposed to actually reduce and expedite permissions as well as potentially funding for new projects here in the United States. So once again, maybe it's not going to be the same reaction as we saw with the nuclear stocks, but this is an area to watch for the market, at least for today, if the news lines actually do hit correctly and you see some favorability when it comes to these mining companies across the board, especially when the rare earth metals portion.
Yeah, very interesting. Obviously, we had deals that we were making with Ukraine. China has many of the rare earth materials that are needed. So very interesting to hear about the possibility of an executive order. How about